Hey, what's going on? Scott Taylor with sandiegorealestateHunter.com. In this video, I'm going to break down the ins and outs of the USDA mortgage loan. If you have no down payment, if you want to live in the countryside or the outskirts of San Diego, think places like Fallbrook and Pauma Valley and Ramona and Julian and Palomar Mountain and Campo, etc. If you want very, very low interest rates, think of the low to mid twos as I'm filming this, and extremely low monthly mortgage interest, much lower, by the way, than FHA or conventional, then this might be for you, and I suggest that you watch this video. And of course, if you're finding value from this video, I would really appreciate if you would smash that like button for me, subscribe in YouTube to get more hard-hitting videos just like this, and tap the notification bell so you know when a new video like this comes out. Without further ado, let's jump into the USDA mortgage loan. So the great thing about this, there's a lot of misconceptions. This is not just for first-time home buyers. So if you've never owned before, that's fine. If you have owned before, that's fine. It does not matter. This is for a home that you actually live in. Okay, so it's not for a second home. It's not for a vacation home. It's not for an investment property. A home, primary residence, something that you're going to live in. Okay, this is good for a home, for a townhome, or for a condo. Okay, I don't personally deal with land loans. I don't personally deal with manufactured homes or mobile homes or some of these other ideas of buy land and put on a camper or a trailer or something else. To be blunt, I have no idea. So this is for a home, townhome, or condo that you're going to live in. Something else very important, since we know we're buying on the outskirts, let's say, of San Diego, this is not for a working farm. Okay, so it's not for a working farm. You can't buy a farm in Campo or Julian or Ramona with a USDA loan. Let's keep it simple. You're going to live in it, and it's a home, townhome, or condo, okay? Don't deal with land. Don't deal with manufactured. Don't deal with mobile homes. Don't deal with working farms, okay? So the most important thing about this is it's address specific. And as always, look below the video. Everything's going to be detailed out for you with links that I'll be talking about. So look below this video. It's address specific, okay? Again, think places like Fallbrook, Pauma Valley, Ramona, Julian, Palomar Mountain, Campo, Santa Isabel. You get it. Areas a little bit further outside in San Diego. There is a direct link below this video. You can click the link and you go to the USDA website, or you can Google USDA map locator. If there's a property that you like, put the address in. If it's located in the USDA zone, that potentially works for a USDA loan. Very simple. If it does not, then it doesn't work, okay? So the most important thing with this to remember is this address specific. So right off the bat, don't think that you're going to live downtown San Diego. Don't think that you're going to live anywhere from Oceanside, Carlsbad, Encinitas on down, okay? What you're doing is you're buying further out in the countryside. So unless you want to do that, don't even think about a USDA loan. Okay, there's also another misconception that you have to be poor or make very low income. If you're poor or make very low income or unemployed, I have sad news for you. You are not buying in San Diego anyways. So let's get out of the mentality that these loan programs like a USDA loan where you can buy zero down is only for low income. It's not, okay? So again, there's a direct link below this that takes you to their site that you can put in your own personal information, and it's very simple. It just asks you questions like how many people are in your household, what's your average gross income, and then it pulls up some numbers. But to give you an idea, obviously as I do these loans, if you're living in San Diego County and you have 2 people, 3 people, or 4 people that are living in your home or living in your household, okay, the max total income allowed per year is $136,500. So $136,500 per year, or a combined max gross income of $11,375 per month. So if you make $11,375 per month gross income for anybody living at the house or less, then you're fine income-wise. So let's get out of the mentality that you have to make a low income. You do not. Something else very important about this loan are the debt to income ratios. I'll get involved in these in a second. So generally speaking, on a debt to income ratio, we deal with 29% on the front end, 41% on the back end. Okay. I have seen as high with my wholesale lenders, depending on the borrower and their credit score, obviously, that we can go as far as a 34% and 46%. Okay. So here's what this means. Let's just use as high as. Okay. So we can go as high as 34%. Your front end, which is your total housing payment, principal, interest, taxes, insurance, mortgage insurance, if you have an HOA. So as high as 34% for housing and as high as 46% for total debts. Total debts, what's on your credit report, plus your future housing payment, divided by your average gross income over 12 months. So let's simplify. Let's just say you make $10,000 per month gross. The front end would be with 34%, so that's $3,400 per month for a total housing payment. The back end, we can go 46%, so up to 46%. So we add up your total debts plus the future housing payment, means we can go up to 46% or $4,600 if you make $10,000 gross on your back end. So up to $3,400 on the front, $4,600 on the back if you make $10,000 per month gross. Okay. Now, obviously, we stick to the 2941 rule for most people, but if your credit score is better, if your debts are lower, then obviously the heights that I personally have seen, and I've reached out to my top wholesale lenders for USDA loan, they said, hey, Scott, 3446 is really as high as we've seen. So current credit scores, it goes without saying, you always want a better credit score, and the higher credit score you get, the lower your interest rate. Makes complete sense, right? And the lower, not only your interest rate, the higher your credit score, but the higher the debt to income ratios that I just went over, we can get. So generally speaking, you need a 620 middle FICO score, okay? So if it's just you, I pull your credit and we use your middle score. If it's you and a co-borrower, we use the lowest middle score out of those two people. Something to talk about as far as credit scores. Do not worry about Credit Karma or Credit Sesame or what your credit cards say or what your bank accounts say, etc., etc. Those sources are good to make sure your accounts are accurate, to make sure you're paying things on time, to make sure that you don't have any late pays, etc. Unfortunately, we do not rely on those credit scores. So don't freak out as far as the credit score. I deal with this all day, every day. This is one of the most important points to mention. So our middle credit score minimum is a 620. Really, a 640 is better because what happens is a lower credit score, you have a higher interest rate because you get hit. They're called hits with a lower credit score on your rate. So the higher credit score, the better. The lowest, for the most part, is about a 620 middle credit score. The other awesome thing about this loan, the USDA loan, is there no max loan amount in San Diego. Generally speaking, we have the conforming rate max loan amount at about $510,000, the super conforming at about $701,000. But with the USDA loan, as long as you qualify income-wise, location-wise, credit score, debt-to-income ratio, etc., there's no max loan amount for this loan whatsoever. Here's another very cool thing about the USDA loan. So you have a 1% upfront guarantee fee on the USDA loan, and you have a monthly fee, mortgage insurance, of 0.35%. So 1% on the front end, 0.35% monthly, right? This is worked into your principal, interest, taxes, insurance, mortgage insurance. Why I say that's cool, if you go with an FHA, it's 1.75% up front. USDA is 1%, FHA is 1.75%. Monthly, USDA is 0.35, FHA currently is 0.85, okay? So generally speaking, if we're going with a USDA loan and it works, your upfront is less and your monthly is less, therefore your monthly payments are less. So if you've had a Chapter 7 bankruptcy and you have a discharge, you can buy using a USDA loan from 3 years from the discharge date. So whatever that discharge date is, you can start 3 years after the fact, right? 36 months, makes sense. If you've had a foreclosure on any property with the USDA loan as well, it's 3 years after the fact. Here's the thing about the foreclosure date. It's the actual date that you had to be out of the house and you lost possession, right? So whenever you were kicked out of the house, unfortunately lost possession, that's when the clock starts, and it's 36 months from there. Okay, cool. Don't forget, there's other videos in the series about the USDA loans. We just went over the program highlights. We're going to have one about 5 or 6 secrets about this loan that are fantastic. The most common questions about the USDA loan, and what are the needed documents that you're going to need for the USDA loan. But if you want to get started right now, look below the video. There's going to be links where you can fill out the loan application right now. And here's the process. Or you can go to scottsloanapp.com. Here is the process. It's very simple. You can apply online at my site in 10 minutes or less. Literally, it takes 10 minutes. Most get it done in 3 to 5 minutes. From there, you log back in just to verify it's you, and you fill out the rest of the application. It's very quick. It's very easy from your computer, smartphone, tablet. It's all secure. Okay. Then from there, you upload your basic needed documents. Okay. For the most part, it's a copy of your driver's license, last 30 days paychecks, last 2 months bank statements, all pages, last 2 years tax returns and W-2s. If you don't have them, Google IRS tax transcripts. You get them completely free online. Then, if you have anything as far as stocks, bonds, mutual funds, retirement, 401k, etc., just the latest statement with that. That's it. People make a big deal about these documents. You need 5 things. That is all you need. From there, I look at your loan application. I see your supporting documents. I run your credit. We see what your debts are. Obviously, we see what your credit score is. We see where your debts are. I work out your debts plus a future housing payment is your total debts divided by your average gross income. Generally speaking, I average it over 12 months, and we come up with your debt to income ratio. I see if the USDA loan works, and then I give you a max loan amount and what your payments are going to be. And by the way, if the USDA loan does not work, I have other zero down loans. If you're a veteran, you can go zero down. And of course, I have down payment assistance loans that I can do as well. So we can either go with zero down USDA if you're a past or current military, or the most common is we could go down payment assistance. That is it. I really appreciate you watching the video. If you have any questions, if you want to get started, head over to my website, sandiegorealestathunter.com. And as always, shoot me a call, email, or text. I look forward to chatting with you and helping you sometime soon.